Hey guys, let me show you what not to do when it comes to property investing. Now, in South Africa, a lot of my friends and people I know, when they say, hey, I'm a property investor, and I ask them, what kind of property do they have? I say, actually, I'll tell you, you probably own a 2-bedroom apartment, a 2-bedroom townhouse, a 1-bed flat, or some kind of townhouse in a complex. And when I start going through the numbers with them, before they even get halfway, I can say, is it a negative cash flow? And they say, yes. Let me show you why. Let's assume there's a 2-bedroom, 1-bathroom apartment in a good area, maybe close to Sandton, somewhere where, it's a decent area, it's a good area. Here's the problem. The asking price, and this is an actual example that I did at the 2-day property workshop. The asking price was $670,000. Now, the person that bought this property paid $670,000. That's a no-go. But the reason they paid $670,000, why? Because the estate agent told them to pay the asking price. Mr. Buyer, look at the kitchen. The kitchen is pristine. The bathroom is beautiful. The tiles. And to be fair, it was. The photos looked immaculate. So the person made a decision based on 2 things. The agent told them to pay full market value. Why? Because they want to get their comp, understandably. Second one is emotion. Wow, it is beautiful. The bricks and mortar, I'm going to make money. Let me take you through the numbers to show you why they don't work. Now, 670. Now, depending on the interest rates, on the 2-day workshop, I was looking at interest rates of prime plus, prime minus. So we just use the figure here of 7,030, more or less what the bond would be at 100%. Then we went on to property 24 and we went to to rent and we started looking at properties to rent to find the average rental was 7,500. Which is actually slightly high, but you're trying to be optimistic, right? But already, the income minus your expenses gives you a negative 470 Rand. But let's look at all the fees that most people don't even talk about. Levies in this area, very high, 2,450. Rates and taxes, 849. Now, these are 3 line items. Please write this down for me. Maintenance, management, and voids that investors don't tend to look at. You see, what most people do is they'll look at the rent, they'll look at the bond, and they might look at levies or rates, and some people don't even do that. But what about maintenance? There's a certain level of maintenance that's going to happen, maybe not year 1 or year 2 if it's brand new, but it's going to happen. So you want to be using a contingency between 10 to 20% of the gross rent. There's the maintenance management. Now, you may be self-managing if you're the right property manager. But remember, I'm going to ask you the question. Are you a property investor or are you a letting agent? Choose. Because you ideally want to become an expert in one of them. So let's take management fees here, 10%. And what about voids? When it comes to vacancies, you can't tell me that you're going to have 100% occupancy rate on your little 2-bed property. Because at some point, your tenant will give notice and you may need to do a lick of paint and you're going to advertise for a new tenant. So we need to have contingencies involved when you're dealing with property. So when we look at the final figure here, we've got the total rental income is 7,500. That's the rent that's coming in. Minus all my expenses, I'm left with a minus 6,264 Rand. Minus. Times that by 12. That's over 72,000 Rand we on minus for the year. Now, you're probably saying, oh, Andrew, but I'm going to get capital growth. No, you're not. Not necessarily. There's a lot of areas in Gauteng and Joburg where there's been zero capital growth for a long time. So here's the thing. You've bought a property with no equity. You pay full market value. You've taken on, remember, when you buy a property, there's risk versus reward.